Just moments ago, the Fed releasing another interest rate increase of 0.75 of a percentage point. This is the fifth time the Fed has raised rates this year. And based on a forecast from Chair Jerome Powell, there are likely two more increases still to come. Joining me now, NBC business and data reporter Brian Cheung. Brian, good to talk to you. So this is yet another 0.75 of a percentage point. This is exactly the number that was predicted to come through. Nonetheless, it's going to hurt, especially when it comes to borrowing for folks. The idea, though, is ultimately, right, to avoid a recession and slow inflation. Your reaction to this decision by the Fed?
That's exactly it, Yasmin. When we talk about what the Federal Reserve did about 15 minutes ago, the decision coming in, the Fed making that 0.75 percentage point interest rate increase, that, by the way, is the third consecutive move of that magnitude. That means that they're targeting short-term rates between 3 and 3.25 now. Now, that's significant because we've already seen the previous Fed moves lead to more expensive auto loans, mortgages, other types of credit products, which means this is the Fed's effort continuing to try to slow this overheating economy. Now, the Fed messaging in the statement about 15 minutes ago that more interest rate hikes will be coming in the future. Economic projections show the Fed could have another 1% of interest rate hikes over the next year and a half. We'll have to see if the Fed follows through on that.
Hey, Brian, just quickly here, right? I think some of the criticism is, especially as we head towards the midterm elections, folks really wanting to see that inflation coming down, right? We're seeing gas prices continuing to come down over the last couple of months, now more at a comfortable place. Still food prices, though, pretty sky high, not seeing the effects of these interest rate hikes on slowing the increase in food prices. When could we see that begin to happen?
Well, projections from the economists at the Federal Reserve that they just released show that they don't expect inflation, at least on a year-over-year measure, to fall back to pre-pandemic levels anytime in the next couple of months, which shows that even despite the efforts that we've already seen from the Fed's pretty unprecedented aggressive moves so far, you shouldn't expect to see inflation fall down in the immediate aftermath. That means some patience going to be required as this inflation firefight continues. And again, we're going to continue likely to see a lot of these types of rates on the credit card products and business loans as well likely continue to increase.
All right, Brian Cheung for us. Thank you, Brian. Appreciate it.